Well, good morning, Southern Oregon. Welcome back to the Real Estate Show. So glad you could join us again today. We're bringing back Guy Giles of Mutual Mortgage to weigh in on some of the more dramatic financial news this week. We had the Federal Reserve minutes from Wyoming. We also have some National Real Estate Commission news. It looks like people might be paying their buyer's agent directly instead of having the buyer's agent be paid out of the seller's proceeds. So there's a lot going on, and it affects our lending and our mortgages here in Southern Oregon. So Guy Giles is going to jump on here pretty quick, and we're going to talk about everything that happened this week. While we're waiting for him to come into the studio, let's check quickly with our local statistics. Josephine County this week, year over year, prices are up 17%. Congratulations, Josephine County. A single family residential home now costing $476,782 in Josephine County. Now, the number of solds in Josephine County year over year this week were down 43%. There were only 13 closings, and that's for residential. And the Josephine County number of listings are down 9% year over year this week. There's 363 residential properties on the market in Josephine County. Klamath County prices this week year over year are down 21%. The average residential home in Klamath County now costing $332,447. The number of solds year over year in Klamath County in the residential world were down 5%. There were 19 closings this week. And the number of listings year over year in Klamath County this week are up 24%. There were 291 residential listings on the market in Klamath County this week. So congratulations to that. Jackson County prices are up 3%. The average single family home in Jackson County costing an average of $505,954. Congratulations, Jackson County. This number of solds year over year in Jackson County are down 20%. We had 59 residential closings last week, and the number of listings in Jackson County year over year this week are down 16%. We had 722 residential properties on the market in Jackson County this week. So again, we're still watching fits and starts, but for the most part, we're seeing an increase in prices. We're seeing up and down in listings each week, but it sure feels like we have a lot of business happening. So let's bring Guy Giles of Mutual Mortgage on, and let's talk about what happened this week in Southern Oregon. Well, hey, Southern Oregon, welcome back to the Real Estate Show. We have Guy Giles today from Mutual Mortgage. We have a lot of interesting things that have happened in the housing market this week, Guy. Welcome back to the show, and thanks for being on again.
Yeah, thanks. I mean, yeah, interesting to say the least, especially on our end. We got the Fed that did not raise rates again, and I just got to say this every time. It never directly affects us as far as goes, but what does directly affect us is what they say, not necessarily what they do. So what they kind of said was, well, we're not going to raise it right now, but we'll raise it before the end of the year, most likely. And we'll lower them down a lot slower next year than everybody was hoping for. So even though we didn't get rates raised, mortgage-backed securities took a crap yesterday and the day before. So Friday, they kind of started coming back around again a little bit, because there are people that are looking at the actual fundamentals of this stuff and realizing, I think Jerome Powell said that everybody was robustly spending money. I don't know. Maybe I'm hanging out in the wrong crowd, but I don't know who's robustly spending money right now. You go drive by Waterworld. That's my whole thing for the world economy is just
yeah, the one on 62, the one that sells boats and toys and stuff. Waterworld. Yeah.
I mean, they didn't even hardly have a trailer out there 2 years ago when all the COVID money was flying around, and now they have to put their side-by-sides on the trailers because there's not even enough room. They filled up their whole side-by-side spot, and these are off-road vehicles for anybody that doesn't know. Then they filled up part of the boat trailer place, put 2 rows of them in there, and now they're putting them on trailers. So it shows me from a company that had no side by sides, maybe one, and maybe 2 boats, that the place is full of boats, it's full of trailers, it's full of everything. So I'm not a doom and gloom guy, but you got to look at that sort of thing. And when he says that people are spending money robustly, I don't know. I got to get my hands on some of that crack, I guess.
Yeah, I didn't hear him say that, but I didn't get to listen to the whole thing. So he's making the point that in his view, we're talking about Chairman Powell of the Federal Reserve Bank, who did the Fed meeting minutes this week, that Chairman Powell said that he is experiencing robust spending with the consumers in our nation, and we're sitting here in Southern Oregon thinking, I don't know, we're barely buying gas.
Yeah, that's been playing around up over $90 a barrel again also. So we'll see how that, because that affects everything with that. And it is kind of funny though. It's just like every time they have a let's go save the environment, then they all fly out off to, where's that, Davos, in all their private jets. Powell talked, I looked at the picture behind Powell, and it was the Tetons in the background. So obviously we're talking, Jackson Hole, Wyoming, probably the
Well,
most.
that's where they had the meeting. Isn't that where they always have the meeting?
So they're probably spending lots of money over in Jackson Hole, So anyway, like I said, I'm not a gloom and doom guy. I always try to look for the positive in things, and it's still a good time to buy, believe it or not, with the rates up, before that frenzy comes, because it will happen just as soon as we get a little bit of relief on these things. And a lot of these economic numbers will have to come to roost. You see every month now, they come out with jobs number that are stronger than expected, but then they revise last month's numbers down. So,
and we don't hear too much about that, huh?
No, it's just, it's almost an afterthought. And it really is going to come to a point where they can't, and I don't even know who they are. All right. I equally hate both parties at this point. So it's not like, not equally maybe, but anyway, I don't know who they are, but if we would just quit playing with the numbers, if we just say, look, this is where we really are, and if it hurts what we have to do, fine, but let's just get reality out there and deal with it, rather than the politics playing with the numbers every month, dragging this thing out for years and years and years.
Yeah, well, it makes everybody nervous, and it's also hard to plan. I did notice a report, I don't know if it was yesterday or this morning, that mortgage applications finally ticked up in August. And it's not up by very much, but it's starting. And it's interesting because I wanted to ask you this question today, because it seems like since Labor Day, it's been almost as busy as it normally would have been in the springtime. And we had that weird lag in the housing market, at least here in Southern Oregon during the spring. And I'm wondering, could this be our spring market finally kicking in here at the end of the summer? Are you seeing any increase in your activity?
Well, I did. I was out of town for gosh, a couple weeks. I did go to Scotland, and I got my trip out of the way, so I just got back from that, and I did a lot of business while I was gone. It was
Isn't that funny?
Yeah, every time you even think about leaving town or doing something, so that was actually really, really nice as far as that goes. It feels a little slower since I've been back, and it's just been like this for a couple of years, where everything goes crazy for a few minutes, and you think, man, we're here, and then it stalls, and then
so it's going in fits and starts.
That's the way it's been, at least in my business, and I got into the purchase side of things and got away from refinances over a decade ago, because I never wanted to have those peaks and valleys like that, but there just doesn't seem to be a way to avoid it right at the moment. I have had a couple people coming in, getting pre-qualified this week, and they're getting ready to go. So that's how it all starts. But at the same time, it just, like I say, every time it feels like we're done, we're ready to go, then it just kind of slows down. And I guess, anyway, I was reading as far as the applications. I mean, I think they were up like what, 2% or something.
Which is not a big increase, but it's something.
No, and I think refinances were 13% this week. So
Oh,
now if you got one refinance going on, it doesn't take a lot to add 13% to that. So don't, I don't want to be that headline person either, trying to say something. I mean, I haven't done a refi. Maybe I'm just not doing my job, but I haven't done a refi in 2 years, maybe three. And my old clients come back to me. It's not, I don't think they're mad at me because they come back to me when they buy a house, but there is a lot of talk right now about, you have credit card debt. I think the average car payment, which I don't know that that's like that around here, is over $700, at least
a month.
Yeah, nationwide. And people are refinancing to, consolidate debt, because I don't think there's ever been a time where there's been more equity in people's houses.
Oh, I see. So you're saying people are refinancing not for a better rate, but to pay off debt, kind of consolidate their finances.
And I've never been a guy that just wants to try to find a slick way to sell a refinance. Your car that's going to be paid off in 2 years, to turn that into 30-year debt. Don't get me wrong, but there are times, say you're setting yourself up for buying something, in the near future, and maybe you do go in and do a cash out refinance, take your debts down from $4,800 a month down to $3,200 a month, get prepared to buy that next house, in the spring or whenever you think that it's right for that. But I have actually seen a lot of people benefit from getting rid of a lot of these high payments, consolidating them into their house. I mean, like I said, I'm hearing stories. I'm not doing a lot of them because I usually try to get really creative with people and, just go with their circumstance, does it make sense and does it not? But I think if these rates don't come down soon, it's probably going to actually be a benefit for people to think about refinancing their house. And, if they've gone out and got a bunch of consumer debt. And so I don't know, it's at least a conversation if you're hurting right now.
Well, and again, it just underlines the amount of equity that homeowners have in their properties. And that's part of why we don't see, even if people are struggling financially, we don't readily see a lot of foreclosure or short sale activity. It's just ridiculously low, those distress sales. And we used to depend on a certain amount of that, not to wish ill on anybody, but there's a certain amount of those distressed properties that we counted on having in our inventory so that we could sell them to new homeowners.
Yeah. And even though that hurts as far as not having some more houses, the good side of that is the reason that we don't is we've been lending responsibly for a long time now. And literally you had to qualify, there's just no way around it. Even on the loans where you're really not, for the self-employed people where we're doing the DSCR loans or the loans for the bank statement loans, we're being fairly conservative on your income. So what we can do now is we can just look at your bank statements. If you're self-employed, we're not going to do that if you're a W-2 employee. But if you're a self-employed employee, we can take a look at all your receipts coming in, kind of like the old stated loans, but not just you tell us what you make. You actually have to show that stuff's coming in. So you have a lot of write-offs. We know that that's not going to look good on a tax return, but we know that money's coming in. Even on those loans, those ones aren't defaulting either. And we've been doing those for 10 years now, or maybe 8. And there's just not really any super risky loan programs out there. I think probably the only negative amortizing one is the reverse mortgage loan, but they're so conservative on where you have to be equity wise in those houses. People aren't losing those either. So the whole thing's going fine as far as, at least from that standpoint. And that just shows that it's probably not a bad time to buy. And if you're waiting for everybody to foreclose, it's not going to happen.
Yeah, we just don't see that. And we watch the numbers every single week just in case. But gosh, people have so much equity that if they do get into a bind because of their personal finances, they can sell that house and still have money left over for the most part.
Oh, absolutely. Absolutely. And just like we go over every week, every month, rents go up. People need to factor in that if they're buying a house, the amortization piece of the thing, they're paying the thing down also. There's tax benefits from it. Your house is appreciating. There's so many reasons to buy if you can. I think one of the headlines out this week was that, and it was from realtor.com, that it costs in 50 or 47 out of 50 of the main metropolitan areas that it costs $1,100 more to buy than it does to rent.
That's not a big spread.
Yeah, and for the first time home buyer. So yeah, and so that looks bad, but I've done the math and I've gone over it here. It doesn't take long before the thing it reverses, even though you're paying more right this moment.
Yeah, we've got to take a quick break. We're talking to Guy Giles, Mutual Mortgage. We've got a bunch of news to talk about for the housing market. Do not touch that dial. We'll be right back with Guy Giles, Mutual Mortgage. Well, hey, Southern Oregon, we're back with Guy Giles, Mutual Mortgage, talking to him on the real estate show. We were going over some of the ups and downs with the Federal Reserve announcement this week, Guy. And one of the things that's interesting is it seems, at least in Southern Oregon, the market has picked up a little bit.
It seems like I don't see that side of it as much as you guys do as far as what's actually coming on and what's going off, but I do get that little snippet from the local association of realtors here.
Mm-hmm.
It looked like there was more coming on than there was.
Well, I think we're opening more doors, so we're like seeing that the activity is there. We're actually getting some more listings on the market too, so there's something for people to look at.
I guess that's what I meant. It felt to me from just glancing at that today that there was more listings coming on than and so that's good. I mean, people need to move around for sure.
Well, and I think, having a low interest rate, it's interesting because people don't always love their house that they bought during the pandemic, but they're worried about selling that and buying something else because they're worried about their payment. And we talk a lot on this show about how if you do the math and you have a big down payment, that your next purchase might be just fine. You might not be that far off from where you're at already.
That's 100% true. I mean, people, in the past, they'd sell their house and barely come up with a down payment, and you are right as far as that goes. We've enjoyed really low rates for a while, but overall, what are we doing here? You want to be in the right house that's comfortable for you, and if you just got to have the conversation. And rates aren't going to be up forever. Like I said, if we're doing your purchase loan right now, we're not going to charge you bank fees.
Oh, that's good.
Some title insurance or something, but to refinance when the rates go down, I'm almost afraid for what that's going to look like. I have quite a few people lined up that are just kind of ready to go, and then I'm not going to be charging them, like I said, the bank fees when the rates drop, and they've got in their house. And at this point, I mean, I think it was I was looking at an article from Friday from what was it, First American, and they're saying that 8 months in a row now houses have gone up, and
yeah,
July to August it was 0.7% again.
Yeah.
So year over year we're at 5.6%. And all of the math that we went over here on the show recently, and maybe we need to go over it again next month, I think I was using 4.3% depreciation just because I really wanted to make
I was using 3.
Yeah. So I think no matter what, you're actually benefiting like the banks benefit as far as this compound interest. I mean, every few years, your house is gonna it's incredible how 5.4% sounds like it's pretty good, but then you add that in, and then you're compounding that next year, and then that, and it's amazing the wealth, and it's just a piece of your portfolio. You have to have a place to live anyway, so you might as well be building equity in your own house.
Yep. Yep. And Southern Oregon, don't you think it is one of the quote it girls end quote in the United States because we are a lifestyle destination? We've got a little bit of everything.
There really is, and as beautiful as Scotland was, here there's just more lakes to go to. There's more public lands that you can go on. So much of these other countries are just. I looked into going fishing, and you had to get on somebody's private property to fish, basically. And here you can go do that anywhere. You can go, still up in the woods with your Jeep if you want to, or you can go hiking, or there's just no place quite like this.
Well, and it's interesting because we always think of Scotland, Ireland, Wales as being super lush and lots of open space. And then we find out, like you just said, that a lot of it's private land. And Oregon is, I think, a little unique in that we have, and whether you like this or not, we have the majority, I believe over 50% of our lands is owned by one government agency or another, but that's what gives us all this access. But then I think we have some of the lowest private percentage of ownership in the United States. We'll have to double check all that, but a couple of years ago, it was like over 50% was public land.
Yeah, and alone. I mean, I know places up in the woods where you don't even have to talk to anybody if you don't want to, and that's rare. Texas, everybody's going there, but there's not that kind of public lands like there is here. Idaho, which I love, same thing. There's still places to go, but not like here. This is really unique.
Yeah, we're pretty lucky, but it also does raise a little bit of havoc with our housing because, like in other states, they have such a high percentage of public lands that can be developed. They have more housing, so yeah, so that's kind of the trade-off. But Oregon is beautiful, and it sure is an amazing place to live. We're very lucky, and it kind of keeps the prices going up because of that.
Yeah. I actually brought it up in a government affairs meeting this last week about, retrofitting a lot of this commercial stuff, because even though we're not hit as hard as they are in some of the bigger cities, there's a lot of areas where there's just dead commercial space. And I was like, well, why don't they just turn those into houses? And I guess with all of the regulations and with everything it would take to bring those up to speed to sell them off, it's just economically not feasible, which was unfortunate because I thought I would maybe single-handedly solve the whole thing. And
yeah,
apparently I'm not that person to be able to do that. But that's just another thing. I mean, if you look, there wouldn't be that many empty spaces in these big cities if people were not working from home. And it's like, if you can work from home, where do you want to be? Do you want to be in San Francisco? And I think people are going to want to be here. So it's a good place to own property for sure.
Yeah. And they do studies on they call them migration, where people are leaving one state and going to another. And we still have a pretty big exodus out of California, New York, and some of those other bigger places. But Oregon seems to be kind of in the middle right now. We seem to have about as many people moving in as moving out.
Yeah, unfortunately, there's not quite as much for. Well, I mean, our houses are a little expensive, and kids want to go have something to do at night, so maybe they go out and play for a little while. And I've seen a lot of them. I'm finally at that age now where my kids' friends went off to college. Some of them stayed gone, but a lot of them come back, and they're a little bit more established. And now at this point, they're able to afford to buy a house. And it is kind of the weird catch-22, because when you're young, you want to be around the nightlife and all the stuff going on, but then
well, you think you do.
Well, yeah, you think you do. I was never that guy. Just give me access, the green gates, as long as they're open, yellow ones up in the woods, and I can get up in there.
Yeah. Well, see, and that's the Southern Oregon lifestyle is definitely has a more outdoorsy bent to it than the big cities. So Yeah, but it's funny when the young kids move away and then they move back, and it's like, oh, I'm so glad to be home. And it's like, yeah, we know it's why we don't really go anywhere.
I know,
We love it here.
I
So,
know. It's so
um,
easy, I think, to get lost in a big city and just,
yeah. Well, and there's definitely a wider variety of jobs, but yeah, they've got their own problems. So one of the things that happened this week that we're still trying to get our heads around is there is and I just wanted to ask your opinion as a lender. The National Association of Realtors published an article that there's an ongoing lawsuit that involves some of the other national and international real estate companies having to do with commission. So do you have anybody talking about this? Because right now it's starting to sound like buyers will be paying commission for their own agent. It will not be funded from the seller side.
yeah, when I first, I mean, it's kind of funny because the sellers have always been paying the commissions, if you really think about it. I mean, I know that sounds contrary to what we always think. And I think part of this lawsuit, I mean, am I really familiar with it? No, but I have heard, a few different things. At the end of the day, it's baked into the price of the house. So you are kind of paying for it. I think the problem kind of came from real estate agents running around, and I'll tell you, I've been guilty of it too, by saying, hey, don't worry, the seller's paying, the fees as far as that goes.
Oh,
But
the real estate agents are saying they work for free.
basically, I think that was where the initial lawsuits came from, was that they're just like, it doesn't cost you anything, that the seller pays. But in reality, if you didn't have real estate agents that were, and I'm not a proponent of not using an agent. I mean, there's things that you really need to have an agent helping you. But if you weren't paying the agents, then maybe that house didn't sell for as much as it would have. So technically you are already paying for both sides of the thing. Or, I mean, I guess you could look at it both ways. Maybe they could get a little bit more money out of the house, but they're already paying for it in one way, because that's all factored into the price of the house that they are buying.
Mm-hmm.
But I thought that it was more around how it had to be disclosed. So it's a little bit of news to me what you're saying, as far as you're actually going to come out of pocket to do it. And I don't know if that just means, at least in the interim, that everybody just changes everything and now the seller's paying for closing costs. I don't know how it'll settle out, because I really haven't done a lot of research into it. But
So here's my question, because if this is going to happen where the seller's expenses for commission are going to go down and the buyer's expenses for their agent's commission is going to, I don't want to say go up because they don't have one now, but it's going to be like $5,000 to $20,000. What can a lender do so that the pre-approval can still be intact, like the budget can still be intact? Or is that what's going to happen, is that we're going to have to lower the buyer's pre-approval so they can write that check?
yeah, I guess when it's all said and done, whoever's selling that house is probably going to go buy another house. So then they're going to end up on the other side of that deal also. So maybe the net really isn't a whole lot different, where they're just paying for these things. Otherwise, pay me now or they'll have to pay it when they buy their house. So I don't know. It's going to be a big shock to the system. There's no doubt about that.
And is it really going to be a difference? Or is it, like you said from the beginning, that we're just calling it something else, but it's still coming out of the deal?
I think that the root cause of the whole lawsuit of everything is just disclosure. And I think if you disclose, what, this is not free. This isn't free. People are getting paid, and they should get paid. But you can't really run around and just say this doesn't cost you anything. All the real estate fees are paid by the seller, because you're paying more for the house because of it. So I think a lot of it's going to be just done around how we have to, I'll say how you guys will have to disclose what's going on. And I don't know if that lawsuit actually been finished or.
Almost. And you know what? We've got to take a quick break. We're going to be right back with more of Guy Giles and Mutual Mortgage. Don't go away. Well, hey, everybody. Welcome back to the Real Estate Show. We're talking to Guy Giles and Mutual Mortgage, and we're having a pretty interesting discussion about some of the new laws that might be changing regarding commission, having buyers pay their own agents separately. And we're talking to Guy Giles, Mutual Mortgage, about how that could affect pre-approval letters. And you were wondering if it was just going to kind of end up coming out of the deal anyway, maybe like closing costs. How would that work?
Well, I think that like right now, if you buy a house, you're not obviously obligated to pay closing costs, but you can, depending on the program, up to like 6%. And if
well, there you go.
So I think where I was trying to go with that is they're going to put emphasis on making sure that the buyer is aware that it does cost them something on their end of the transaction. So even whether they see it or not, it's kind of factored into the price. If you're going to sell a house for $300,000 and maybe would sell for $330,000 if there was no real estate fees at all. So I guess they just wanted people to understand that there is impact to the buyer, even though technically it's coming out of the seller.
Well, and that wouldn't be that big of a change then, because it would just be more of a disclosure that this is what this agent's getting, this is what that agent is getting, and we're just disclosing and not really changing the practice. Is that?
And then they'll probably love the heck out of it until they find out that could potentially become a tax write-off. Maybe like when you pay points for a loan, you get to write that off. I haven't even put any, that just kind of came to me just now, so I don't know if that could become a benefit, at tax time, if you're technically paying for it. But I guess
the buyer would get to deduct that on their taxes. Yeah, probably.
Yeah. I mean, that would be more of a question for, well, who knows? Because until they,
well, you know what, we're going to have to ask some accountants. Yeah, that's going to be a big deal.
Yeah, I don't know. I don't know where it lands. I mean, I do think I like disclosure. I like people to really understand the ins and outs of everything. A lot of people on my side of the fence, I'm not Frank Dodd fan, everybody knows that, but a lot of the legislation that they wrote was very, very good for the buyers, and that's who I'm trying to protect always. So same thing with this, if they understand it a little bit more. I've had people call me on the side and, hey, do I owe my real estate agent money? They've been driving me around for a while and we haven't found a house. It's like, no, you're not racking up a bill. You're all right. Just stay faithful to that person when you buy. That's how you can, kind of pay them back. But, so maybe a little bit more talking about it, up front isn't necessarily a bad thing. I found the more discussions that I can have with people up front, especially first-time home buyers, the smoother the whole transaction goes.
Yeah. Or if it's been a long time since somebody's purchased out. Because if you used to buy houses before the crash, the housing crash of 07, 08, 09, whenever it hit your neighborhood, then it's a whole different gig.
Oh man. I was having so many conversations with people, so mad that I would have the gall to ask them for a bank statement, or, I mean, like, this is protecting you. That's the reason we don't have the foreclosures right this moment. It's the reason that the housing market goes up despite every headwind that you could imagine right now. And it's a good thing, just bring a freaking bank statement in and let's land the plane. So anyway, but I'm not having those conversations like I was before, but I'll tell you what, 5 years after that crash, it was just brutal trying to talk to people that, had the whole fog the mirror mentality about buying a house.
Well, and also so many people lost their home or had to do a short sale. And there was a lot of confusion about how long people had to wait, depending on which process they were going through. So,
Well,
yeah, there was
yeah,
just a lot of confusion in general, but a lot of that's been sorted out. And like you were just saying, that's brought some stability to the mortgage market, and people are not in danger of losing their houses now.
no, it's been really good from that standpoint. So I'm always really comfortable when I close a loan that somebody can actually afford it.
Mm-hmm.
I
Well, and
don't,
it's interesting having these changes on the real estate side. It does affect the lending side, but it also the question is now, would it be a bad thing if buyers hired their own agent and paid their own agent?
um,
Is that like,
so
just in principle, would that be a bad thing?
I think that I some people are going to hate me for this, but I mean, what about Buffy the the vampire realtor or whatever? I have so many people that go into a barbecue, Buffy the barbecue slayer, I guess is what I call them, and it's like,
Oh,
oh,
the part-time agents?
yeah, I had this great agent that I used 4 times, but you know what? I met this girl at this barbecue, and she's gonna sell my house now. So if you go out and you have a really good quality real estate agent doing the job for you that's been in the business for a while, I mean that and you have a great experience, that's one thing. But what if you pay that person, you're 2 months in, this person doesn't know enough to, that you can't have peeling paint on an FHA, and you're writing dumb offers, and you decide you want to move on to somebody else. So I don't know how that works. And I was new too, so don't get me wrong. I think that,
That's what training is for, and all the companies have really, really good mentoring.
yeah, but I guess, I put work in a lot of times just to have some online lender, I mean, I'm generally the best deal, but I've had, I've lost a deal because somebody had an old relationship that they forgot about or whatever. So I don't know how that whole thing would work. I mean, do you pay that real estate agent up front? I mean, I don't know. Do you sign a non-compete with them?
Well, there'll have to be a breakup clause, just like there is on a listing. I think all that'll have to be negotiated,
Yeah. So, I mean,
and there'll have to be forms.
yeah, I guess if that's what you were asking, I mean, it could get kind of weird if somebody was out with somebody and, after a couple of weeks, they realize that it's just not a good fit with that agent, so I, I don't know, maybe that's not what you were asking. And
Well, we don't really know what to expect. And folks, we're talking about some National Association of Realtor reports that came out this week, talking about how nationally that we could be headed for buyers paying the commission for their buyer's agent, that instead of having it come out of the seller side, which is traditionally how it's done. And we're just trying to figure it out. And we only have a few seconds left. And Guy Giles, Mutual Mortgage, we want to make sure you get to say your phone number and say your email.
so I'm ggiles@mutualmortgage.com. And if you just look me up on Google, you can find that. My phone number is 541-944-6987.
And you're great about getting back to people. And if he doesn't answer, he will text you, right?
I get back to everybody, except when my phone was messed up a year ago, and still don't know what happened.
Well, and you also have a great team. So even though you were on vacation for a while, everything went just smoothly, didn't it?
Thankfully, I have very, very smart women around me that take care of me. And take care of you. So
yeah, you have a great team there at Mutual Mortgage. Well, folks, that's all we have for today. We'll be back again next week. Have a beautiful Southern Oregon weekend. Bye now.
thank